Hi, I'm Donald McIntyre, founder of Etherplan, and today I'm going to talk about the Ethereum Classic price prediction for November of 2024. Disclaimer, this is my personal opinion. I do not give investment advice to anyone. I do not charge for this. I do it as a volunteer. I've been volunteering for Ethereum Classic for a long time. Etherplan is my personal blog. I write personal stuff, make videos, etc. about my opinions about things. Nothing of what I say here is related to my paid job at the ETC Cooperative. That's important. The ETC Cooperative, I work as a senior editor there, and the ETC Cooperative has a policy to not talk about price of Ethereum Classic. We just support the protocol, the client of the network, the main client, CoreGeth, and provide a lot of infrastructure services and also communications and telling the world how amazing Ethereum Classic is. But price prediction, this is just my personal opinion through Etherplan. This is in my Etherplan YouTube channel and on my etherplan.com blog. And also, I do not currently own ETC. In the past, I've said, and it was true. It was always true that 100% of my savings are in ETC, and that is true. Currently, I have zero savings because I bought some land and I had some family things to attend and spend a lot of money this year. So, and ETC was trading below 20 nearly the majority of the time that I needed the money. so so between, I would say, below 30, and I sold a lot below 20, below 19 even. So I need to rebuild my ETC savings, which will be 100% in ETC whenever I get savings again. Okay, I'm going to start with history, then I'm going to talk about the advantages of Ethereum Classic, why it's so valuable, and I'm going to end with the price prediction itself. The history of the whole blockchain industry starts in the late 1980s with cypherpunks, who were a group of computer scientists and software engineers. They saw the techno tyranny that would come by combining the internet and harvesting of our information and trusted third parties. So they saw these things combined, and of course, the current tyranny that we can see, and it's going to get even worse, the techno tyranny that is coming. They saw it. They foresaw all this by the end of the 1980s, and during the 90s, they started building a lot of technologies that we use today for privacy, encryption, and to protect our rights, even in the internet. They focused on privacy, hard money, smart contracts, and trust minimization of third parties. The first digital currency attempts. The first attempts at creating a digital currency included Hashcash, which was I would say it's where proof of work came into Bitcoin. Hashcash, it used proof of work to prevent spam between emails, by Adam Back. BitGold by Nick Szabo, it uses proof of work but to create digital gold. B-Money by Wei Dai, and reusable proofs of work, RPOW by Hal Finney, which wasn't used in the end. B-Money, though, is a network, is a combination of Hashcash and BitGold, but in a peer-to-peer network similar to today's Bitcoin. So the concept of how Bitcoin works as a peer-to-peer network with replicated information, where some of the computers mine and produce BitGold and the rest verify, things like that, was the original design of B-Money. This I'm talking about Hashcash, BitGold, and B-Money. They're all inventions of these amazing guys, people, and brilliant guys. During 1997, 1988, 99. RPOW in particular, I think it was 2004. Satoshi Nakamoto and Bitcoin. So then years later, in 2008, Satoshi Nakamoto appeared and he launched Bitcoin. No, Satoshi Nakamoto is a pseudonym, very likely. All these people who were working in these things, many, not all, but many use pseudonyms because the U.S. government was after them. The US government didn't want people to use encryption because they considered it like a national security thing. So that's why Satoshi Nakamoto uh, very likely used is one of these cypherpunks, and he used this pseudonym to hide his identity, and he doesn't want anybody to know who he is because of they actually suffered persecution during the 90s. It's something that you have to Google because it happened. It's a ledger with accounts and balances. It uses full replication of all the accounts and balances in all the nodes of the system. It creates blocks of transactions. It has a fixed monetary policy. It started at 50 in 2009, and then 4 years later it went down to the halving to 25, then another halving 4 years later, 12 and a half, then 625, 3.125. So this migration from 6.25 to 3.125 happened this year in 2024. And in 4 years, it's going to go down to 1.5625, etc., until it goes to zero, and there's going to be only 21 million Bitcoins ever printed. Proof of work is the key invention of Bitcoin, and it does four things. It enables consensus between all computers. It's a focal point for entry, exit, and re-entry of the network. It is a protection of the history of all transactions, because to reverse past transactions or to delete them, you need to do the whole proof of work all over again, and it's prohibitive economically and in terms of infrastructure today to do those things. And it's hard money, because to create the money, you need to do a lot of work and spend a lot of electricity. Nakamoto, in summary, Nakamoto consensus is full transmission plus full replication plus proof of work plus block production plus a fixed monetary policy or fixed supply. This is the brilliance of Bitcoin and its simplicity in a way. What does it accomplish? Trust minimization, which means decentralization, which means security. These are synonyms in this context. And it may survive a nuclear war because it's replicated and anybody can join and leave whenever they want. And it created, finally, hard money that nobody can manipulate, more or less like gold in the real world, but in the digital world. Then came Ethereum, the second most important invention in the blockchain industry, and the only other invention in the blockchain industry. Vitalik Buterin invented Ethereum, which is a brilliant design. It adds programmability to Bitcoin, basically. Basically, it's the same design as Bitcoin, full replication and all these things that I mentioned before. And it adds programmability with smart contracts. Has no fixed monetary policy. Ethereum never had a fixed monetary policy. They changed the monetary policy 6 times. The Ethereum ledger stores accounts, balances, and software programs. This is why it's programmable. And the components are, this is the brilliant invention by Vitalik, the virtual machine, integrated virtual machine into the network that is replicated in all the nodes. A programming language that can be executed. Solidity is the one that is used, but it can be other languages as well. A gas system, which basically stops the miners from executing programs that never end. It solves the halting problem. In computer science, you can go and Google that. And it stores programs in the ledger. It enables applications inside the decentralized blockchain, which is Ethereum, that become decentralized. So we call them dApps. Ethereum was proof of work, but migrated to proof of stake. This is the enormous, I would say, moral or ethical, or I don't know how to call it. It's really a shame and a crime that this happened, because they basically took out the soul of the blockchain, and now Ethereum is a centralized system. Why proof of stake is centralized? Now Ethereum is centralized. So in the whole industry, you have proof of stake systems, proof of work systems. You have proof of authority systems, and you have CBDCs. The only system that works is proof of work. And within proof of work, only the big blockchains that are proof of work, and only the ones that are correctly designed. For example, Caspa and Bitcoin Cash, they're badly designed, so it doesn't matter that they are proof of work. So very few blockchains in the world are really true blockchains and valuable. And I think those are Bitcoin, Ethereum Classic, Dogecoin, and Litecoin, which are basically the same chain because they're merged mined, and Monero. Aside from that, I don't see any other blockchain in the world that is valuable. All the rest of the systems have to be built on top of these. Proof of stake is not secure because it does not objectively enable consensus between all computers in the system. It's basically a voting mechanism. It's trash. Does not have a focal point for entry, exit, and re-entry. There's no fork choice, so people have to accept. They have to check on websites or check with a friend, accept whatever blockchain they see, and they have to join that one. They don't even know if it's the correct blockchain. Does not provide protection of all the history of transactions. So if you don't have proof of work, if you have a transaction that happened 5 years ago, you just go and remove it, or change it, or change the state of the system, and there's no consequence. There's no cost to it. You don't have to do all the work, all the proof of work again. So there's no barrier. This is why proof of stake is basically a traditional fiat system with the appearance of a blockchain, because they do data replication and things like that. So it seems like and they add information in blocks and things like that. So it seems like a blockchain, but it's not. It's not hard money because it is not immutable. Thus, trust in the currency is trust in the stakeholders, and that's why they have changed the monetary policy so many times, because Ethereum is a trust-based system. It's and there's no work required to issue the coin. Why proof of authority is also centralized. Here, Ripple, Stellar, EOS. In the previous one, proof of stake, you have Ethereum, Solana, Binance Chain, Cardano, Tron, Avalanche. All those are worthless. They are centralized systems. They haven't invented anything. And in the case of proof of authority systems, they're just a banking system, because to be a bank, you have to be authorized by the central bank. And in these systems, to be a node operator, you need to be authorized by the manager, which is a company called Ripple. And Ripple, Stellar, EOS, these are all proof of authority systems. Proof of authority is even worse than proof of stake, because all validators are trusted third parties. They are trusted people. They don't even put stake or do work, and they get paid for creating blocks. Why? Because they are supposedly trusted third parties who are selected to produce blocks and earn rewards of the network. They have full control of the system. Why are CBDCs? Why CBDCs are also bad? Oh, so here in this table, I do a comparison of the features of Ethereum Classic, and each feature that Ethereum Classic has, some of them are copied by CBDCs, which are also blockchains. I think in general they use the Hyperledger Besu platform, which is a copy of Ethereum, which is basically Ethereum Classic, but Ethereum Classic is the original blockchain. But it doesn't have some key elements. But all the elements, they're going to use them to control us. CBDCs imitate the features of the Ethereum virtual machine technology, thus ETC, but they use them for total control of the population. With CBDCs, governments may control every transaction we do. Central planners will have information of the entire economy in real time, so they will have a new, unprecedented level of power over us. This is because if we all migrate the dollar, the yen, the Chinese yuan, the European euro, the British pound, all to a blockchain, blockchains, one of the features is that they're transparent. When you send a transaction, everybody in the world can see the transaction. And today, in the current system, it's all divided in silos. So you have the European banks, and each bank has their own databases and things like that. So you have Visa, the payment systems, you have the North American banks, you have the Chinese banks. They're all separated. So it's very difficult to know for any central authority or central global government, which is where we're going, to know every single transaction. But when everything is migrated to the blockchain, it will be absolutely transparent, and central governments, or the central world government that is coming, and even intelligence agencies and national security agencies and military and the police and your local militia, your local police, they're going to know exactly what you're doing, and they're going to be able to control you. We will be scored by our political views, social behavior, daily transactions, by the apps we use, and even by the way we think. The only escape from the techno tyranny that is coming will be non-compliance, and non-compliance will only be possible through technologies such as proof of work blockchains as etc. etc is the same. I mean, etc has all these things and it's proof of work, and it's truly decentralized, and the supply is capped. So it has all the components in one system, and nobody can break it. By now, ETC is indestructible. It's a system that is going to be there for hundreds of years. It's indestructible. It's impossible to break. If you send an application there, it's impossible. It's immutable. It's truly immutable. But CBDCs copy some parts of the technology, but then they omit others so that they can control these systems. Um, so it's a total sham in a way. Fiat CBDCs, proof of stake and proof of authority, are copies of true blockchains as Bitcoin and etc, but twisted in a way that they can be back centralized back again. Okay, Ethereum Classic is Bitcoin philosophy with Ethereum technology. Ethereum Classic is the original Ethereum. This is important to understand. Ethereum split from ETC after the DAO hard fork in 2016. Basically, Ethereum wanted to make changes, return the money to people, and to do that, they had to break away from the original chain. And we, ETC, we stayed with the original chain. And it's proof of work, and it's truly decentralized and truly hard money. ETC has the same philosophy of immutability, censorship resistance, and permissionlessness as Bitcoin, and it has the technology of smart contracts of Ethereum. In other words, it's the best of both worlds. If Bitcoin is digital gold, then ETC is programmable digital gold. Hence, Ethereum Classic will thrive. Ethereum Classic is a platform that will thrive as the blockchain industry matures and discovers the truth about decentralization. Proof of stake, proof of authority, and CBDC systems will eventually prove to be more of the same. They will be a disappointment to developers and users worldwide when they realize they are practically identical to the fiat model they were trying to avoid in the first place. The strengths of ETC revolve around the simple fact that it is the biggest blockchain that is both proof of work and programmable. It's unique, it's the only one, it's the biggest one, it's amazing. It's an incredible opportunity, which makes it an incredibly valuable opportunity for miners, dApp developers, users, investors, and donors worldwide. ETC will become a safe haven for human rights on a global scale as developers and users will seek it for its guarantees of true censorship resistance, immutability, permissionlessness, hard money. In the next slides, we will develop the argument of why ETC will thrive to become one of the top blockchains in the world together with Bitcoin. And this is the basis of the price prediction, because it's going to increase in value enormously. Now people don't notice these things. Why? Because all the ICO and VC funded blockchains, such as the ones that I mentioned before, Ripple, Stellar, Solana, Avalanche, Polkadot, Cardano, and even Ethereum has a big stash of money. They have a lot of money to pay people to modify their opinions by paying them. I mean, we know this is proven. No, when governments enter an industry and they start paying people, they change the industry, and basically they degrade the industry, and they make it and they force the participants to follow the dictates of the government. The same happens with these foundations of all of these blockchains that I mentioned. They basically pay everybody to sing their song and their lies that their systems are decentralized and secure, but they're not. But people, when they start realizing that they can be censored, that their money can be confiscated, that dApps are not immutable, that their accounts and balances are at risk, and that the monetary policies are whatever the group who controls these systems may be, they're going to realize these things. ETC is proof of work. This is the first point. That ETC is proof of work. A proof of work blockchain makes it decentralized and permissionless in a way that will never be possible by proof of stake and proof of authority networks. This is because proof of work provides decentralized consensus on a block by block basis, a focal point to freely join and leave the network, an enormous barrier to reverse the chain. Proof of stake and proof of authority do not have these features, making them equal to fiat systems. 2. ETC is hard money. ETC is hard money, hence it will keep its value over time, so miners and users will be enjoying a cryptocurrency that will protect and increase their revenues and savings in the long term. Nobody can change ETC's monetary policy. 3. ETC is programmable. ETC is programmable, therefore developers can build valuable dApps with utility and governance tokens inside its highly secure proof of work environment with no need of bridges, external connections, or proofs. ETC is fully replicated. ETC is fully replicated, which makes it extremely redundant worldwide. It has 4,000, 5,000, 6,000 nodes around the world, 7,000 nodes around the world, making it uncensorable and capable of surviving a nuclear war. ETC is composable. ETC is composable, which means that developers may build dApp systems, or their dApps may interact with third-party dApps that may execute multi-application transactions at once, saving gas fees, reducing settlement times, and increasing convenience to users. Imagine in the future, this is a dApp where you buy real estate. For example, you want to buy land or a house or an apartment, and this is a dApp that is a lending dApp for mortgages, and this is the dApp that does all the administrative part and the title processing with a government or something like that, and you send one transaction and you buy a real estate, which is represented by an NFT on the ETC blockchain, and your mortgage and the title and everything is executed at the same time, and in 13 seconds it's settled. Imagine how the world will change when these things become possible because of composability. And in the case of ETC, it's decentralized, truly immutable composability, not like in Ethereum, for example. 6. ETC is the largest proof of work smart contracts blockchain in the world. ETC is the largest proof of work smart contracts blockchain in the world, meaning it is extremely safe and difficult to attack, which makes dApps much more stable and persistent than in all other blockchains. 7. dApps in ETC are the most secure in the world. Because ETC is all the things that I just said: proof of work, hard money, programmable, fully replicated, composable, and the largest in its segment, then this means that dApps in ETC are the most secure applications in the world. This is very important to understand. There's no other place in the world or the universe where dApps are more secure than inside Ethereum Classic. They are immutable. The US government cannot change them. The Chinese government cannot change them. If the Chinese government and the US government and Russia and India, they get together to try to change a dApp in ETC, they cannot do it. It's impossible. This is more secure than military grade, government, or corporate applications and systems. This is extremely important to understand. 8. ETC's code is law. ETC's code is law, which is a guarantee of immutability of dApps forever. 9. ETC is Bitcoin with Ethereum technology. This is a meme created by Bitmain, the mining company that produces mining gear for ETC, and it's very good. There are only two inventions in the blockchain industry. 1, proof of work, like I said before, as a consensus mechanism, and 2, smart contracts. Proof of work as a consensus mechanism, and smart contracts. Bitcoin is proof of work but does not have smart contracts. Ethereum has smart contracts but is not proof of work because they moved to proof of stake. Only ETC is both proof of work and has smart contracts. This is amazing. This is something that is absolutely digamos, there's so much noise in the industry that people are not understanding this. And not only this, all the technologies, all the work, all the software, all the layer 2 systems, layer 2 systems, layer 3 systems, dApps, wallet systems, etc., that are being built in the whole industry, all of that is going to migrate to ETC, because ETC, everybody's going to realize that ETC is the only truly immutable and decentralized blockchain. Everything that they're building, in a way, they're all working for ETC right now. ETC is the best of both worlds. Okay, so this is the price prediction. Let's see where I put this. Before, let me say what I was going to say. In the current bull market, Bitcoin has reached 99,000, but ETC has been extremely slow to react. And it only reached a high of $39 this year, which was earlier this year. However, in a scenario that the world realizes that proof of stake, proof of authority, and CBDCs are a centralized trap, ETC could very easily reach values proportional to Bitcoin. In the 2028 cycle, ETC could reach only 25% of the value of Bitcoin. In the 2028 cycle, ETC could reach only 25% of the value of Bitcoin and trade at $15,000 or more. So if only ETC is recognized and it only trades at 25% of the value of Bitcoin, I think it's going to trade at 50% the value of Bitcoin eventually, because that is how I've made other videos. That is how markets work. That is how power law works. No, you always have in many things in nature, you always have more or less 20% of the causes produce 80% of the outcomes. So when you have an industry, banking industry, for example, even though in the US we have like 6,000 or 7,000 banks, there's only 4 banks that are the biggest one, and they have the great majority of market share. The same happens in the blockchain industry. Bitcoin is by far more than 50% of the whole share of the whole market capitalization of the industry is Bitcoin. And then the rest are all smaller. So in general, I have explained in previous videos and articles that when you have a power law operating in an industry, especially with network effects like blockchains, you're always going to have a big one. Then the second one is going to be around 50% of value. And then the third one, half of the second one, so 25%. And the fourth one, 12.5%. And then the rest are going to be insignificant. And if you see by market cap how the market is behaving, that is the case now. The only thing is that ETC is going to go from number 30 and worth $5 billion, it's going to go to be worth trillions of dollars, because it's going to be recognized finally as the true decentralized smart contracts blockchain. So the logic of this table is like this: 2013 already happened, 2017 already happened, ETC didn't exist. Here 2021 already happened, and 2024 it's the end, so it's more or less already happened. And at this point of 2024, we are November 27. These are the peak prices that Bitcoin reached in each of these cycles. These cycles are the cycles of the halvings. Every time there's a halving, then it's followed by a bull market in Bitcoin. And so it happened in 2013, in 2017, in 2021. Sometimes it's the same year, sometimes the next year. That's why these are not exact 4-year cycles. And now it's happening in 2024. And these are the high prices of Bitcoin. This year, Bitcoin reached 99,000 and something. And it reached a valuation of $1.959 trillion. ETC this year reached only a high of 39 in 2024 and a valuation of $5.8 billion. So this is extremely, extremely low. If we believe that ETC is going to be 25% of the value of Bitcoin, and Bitcoin is going to be 50% of the value of gold in the next 4 years, which I think is very probable, then this line at the top is the value of gold and projections using inflation for the future. This is the line that's for the inflation projections. So gold in 2028 is going to be worth more or less $19.5 trillion. If Bitcoin reaches 50% of the value of gold, it's going to be worth $9.7 trillion and $480,000 per Bitcoin, which I think is very doable. We are at 100,000. It can go in a matter of weeks or months to 500,000. But this is projecting 4 years, so we have time for this to happen anyway. In the meantime, I think that ETC is going to be recognized as the truly smart contracts, proof of work, hard money, truly immutable, censorship resistance, and permissionless smart contracts programmable blockchain. And say it reaches 25% of Bitcoin, then that would mean $15,000 per ETC coin. And that would give it a market capitalization of $2.4 trillion. So this is the logic of these projections. And this is my video for today, a refresh of my ETC price predictions. I would say that in the short term, very easily ETC can go to 1,000, 1,200, 1,500 now. It's just everything is going up. Bitcoin is going up and leaving the rest of the industry behind. But at some point, the market's going to say, let's go and look for the truly secure blockchains that are gems that nobody is buying, and ETC may very possibly like catapult and rocket to 1,000 very quickly, 1,000, 1,500 or something like that, and then from there continue growing to 1,500 to 15,000. 1,500. What, digamos, in the short term, 1,000 to 1,500, and in the long term, 15,000. No, in 4 years or something like that. Okay, so this is my price prediction. Thank you for the patience of watching and listening to this whole presentation. Goodbye.